All right, so let's be honest. Most traders are just out here taking every single setup that they see and praying that it works. When in reality, guys, if you don't have a strict A+ checklist criteria that you follow each day before you approach the market, you're just another gambler. You're never gonna be successful trading that way. That's why you're inconsistent, that's why you're hesitant, or even worse, you end up taking trades that don't even meet your model in the first place. So inside of this video today, I'm gonna be breaking down my exact A+ entry criteria, literally step by step, so you can stop second guessing yourself and you can actually start executing like a true professional. So please make sure to watch this video all the way to the end. I'm also gonna be breaking down a few trades that we took so you guys can actually get a better understanding of the model. Now, before I get into today's video, guys, I've got a very big announcement to make. A lot of people, they've been requesting this for a very long time, so I've decided to listen to the people and give them what they want. So the live trading group is now reopening back up to the public. For the next 24 hours only, I'm running a 50% off lifetime access sale where you can gain access, come watch me trade live, copy my exact entries and exits, watch my executions every single day at 9:30 a.m. New York time. We break down literally every single trade in there, whether it's a win or a loss or break even. There's always a reasoning behind that trade and why we took it. So if you're looking for that extra guidance, make sure to take advantage of the sale and secure your seat right now. Links are in the description below. Now, if you're looking for more one-on-one guidance where I actually mentor you one-on-one directly, and you're sick and tired of losing, you're sick and tired of blowing funded accounts, blowing challenges, and just getting nowhere in trading, I highly recommend that you go in the description below and fill out the application form for the one-on-one mentorship. That is also discounted 50% off Christmas sale, guys. So do not miss this opportunity, okay? We've opened up only 5 new slots for the mentorship. We've already taken on 2 people and we're looking to take on 3 more people. So if you want to be one of those 3 people, make sure to act very quickly, guys, because slots are going, and once they're gone, it is gone for good. Exact same with the live trading group. For the next 24 hours only, it will be open. Once those 24 hours are done, the group is closed forever again. So please make sure, take advantage of this opportunity, because this will be never ever happening again, okay? But other than that, guys, let's jump straight into the video. All right, so the number one thing on the checklist that I'm gonna look out for every single morning is gonna be a sweep of liquidity. So whether that's buy side liquidity, sell side liquidity, or even better, okay, session liquidity. So if we sweep London lows, for example, London highs, Asia lows, okay, that's what we look out for. So any sort of 15-minute swing high or 15-minute swing low will count as a generic buy side or sell side level. Wait for price to come up or come down and sweep one of those levels. Once we sweep one of those levels, then we can move on to number 2 on the checklist. All right, so number 2, displacement in the opposing direction. So what do I mean by that, right? If we've just swept buy side liquidity, we need to see price displace in the opposing direction. When I say displace, I mean an aggressive move either lower or higher, okay, depending what level we've swept. If we swept sell side, it would be a displacement up. If we swept buy side, it will be displacement down. Number 3, a market structure shift, short for MSS. We need to see price break below either a swing low or a swing high, causing a market structure shift, okay? If we have not done that, again, there is no trade there, is not valid. Every single bullet point on this checklist has to be met. If one is missing, the trade isn't validated. So just to give you an example, if we have swept buy side liquidity, we need to see a break below a swing low in the opposing direction. If we swept sell side liquidity, we need to see a market structure shift in the opposing liquidity higher, breaking above a swing high. Now, with a shift in market structure and displacement, usually you'll get a fair value gap that's created and also a breaker block. So if you don't really know what a breaker block is, I highly recommend you watch one of my older videos on my channel breaking down this exact PD array. Very simple. In short, all it is a failed order block. So it will consist of a swing low, that's followed by a swing high, that's then followed by a lower low, and that's then followed by a higher high, taking out that previous swing high. And the highest up close candle in that price leg will be your bullish breaker block, okay? Of course, if we're talking with a bearish scenario, it will be the other way around. So you'll have a high, a low, a higher high, and a lower low. And the lowest down close candle in that price leg will be your bearish breaker block. Now, entry. Your entry always has to be at the fair value gap. You never enter off the breaker block. You never enter off a mitigation block. You always enter of the fair value gap, no matter what. So as soon as price taps into that gap, you're in. Target the opposing liquidity. So there are two things you can target. You can either target internal range liquidity, which are things like fair value gaps, swing highs, swing lows on the lower time frame. And external liquidity is literally major buy side and sell side levels on the higher time frame, which are obviously outside of the range. So internal is inside, external is outside. Okay, so you're supposed to take partial profits at internal range liquidity, and you should be taking your full position off, meaning you've closed out fully at external range liquidity. This is very important, all right? So the entry must be inside one of these macros, okay? If it's not inside one of these macros, you do not have a trade. You should not be taking a trade. You should be skipping out, waiting for a valid opportunity to present itself. So we have the 9:45 to 10:15 a.m. macro, which is the first macro. And we have the second macro from 10:45 to 11:15. There is also other macros you can trade, which I won't mention in today's video because I personally do not trade them. So therefore, I don't want to recommend them to you lot. Now, these two macros are going to be the best macros where you will find high probability setups. Okay, so only stick to these 30-minute time intervals. If price gives you an entry inside of that macro, cool, take it. Now, let's say if it's 1 minute before the macro at 9:44 and there's A+ setup, are you going to take that? Absolutely not, okay? You wait for an entry, you have to be very strict, very disciplined. If price gives you an entry at 9:45, cool, take the trade. If it's 1 minute after, 10:16, you're not taking that trade, okay? Simple as that. All right, and the last bullet point on the checklist is gonna be correlation with ES. So when you're trading NASDAQ, which we're trading, which is NQ futures, the correlating pair is gonna be S&P 500, which is ES. So you have NQ on one side of the screen and you have ES on the other side of the screen. Now, what do I mean by correlation? If we have had a displacement, a market structure shift, a fair value gap in the breaker block on NQ, right? But ES has not had a displacement, has not had a market structure shift, has not had a fair value gap or a breaker block, then you will not be entering that trade. Okay, let me make it very clear for you. There is no valid trade there, okay? The price action that you're seeing on NQ, you have to see similar price action on ES. If it's not showing that, there is no trade, okay? It's as simple as that. There was many people that have taken trades and those trades have not been correlated with ES, and they've asked me, Ben, why is this trade not played out? I've done every single thing correctly. I followed your checklist, right? This is A+ trade. And I say, listen, brother, you've not looked at ES, okay? It's not correlated. You're not looking at ES. You're just trading blindly NQ. You have to look at the correlating asset, especially when you're trading futures. If you're not, you are trading blindly. And most setups will fail, okay? That's exactly how I avoid a lot of losses, because I'm looking at ES. ES has no gap, but NQ is showing a very clean setup. Okay, cool. I'm not taking that trade because ES has not got a fair value gap. And there's been many instances where that trade has been stopped out. Right, and people look at me and go, Ben, why have you not taken that trade? This is A+. How did you know it was going to get stopped out? That's exactly why. Okay, correlation. So write that one down. That's very important. Make sure to screenshot this, save it for later. Okay, and of course, we're going to be going over risk management, the exact risk management to use with this exact model and strategy. So that is pretty much all you need on the checklist criteria. Make sure all of those bullet points are ticked off before you take a trade. If one of those are missing, there's no trade. Okay, let's start off with a 50K example. So let's say you're either with Top Step or Apex and you have a 50K account, okay? You're gonna be risking 8 micros, okay? So that's around $480 risk with a 30 handle stop. So with stop loss placement, you never wanna have anything more than 30 handles. If you have a 40 handle stop, a 50 handle stop, that trade is not valid. You either skip that trade out or you wait for a very clean entry, okay? As long as the trade provides you a valid stop loss of 30 handles, that's fine, you can take it. Now, you may ask me, where do I put my stop loss? Don't worry, I've not forgotten about you. Your stop should always go either at a swing low or swing high. Depending on the direction of the trade, that is where you're gonna put it, okay? Now, if you cannot put it at the swing low or swing high and you're risking too much, what's the second best place to put it? It's gonna be the displacement candles low or the displacement candles high. Now, let's say you can't even put it there, okay? The minimum stop loss placement is when you're covering the imbalance. So you have to cover the imbalance at least, okay? That's the minimum stop loss placement. If even then you're risking more than 30, you should not be taking that trade, okay? You should either skip that trade out or wait for price to give you a valid entry where you can actually allow yourself to risk 30 handles and the trade and the stop is valid. If the stop is not valid, do not take that trade, please, because you will get stopped out, and then price might go in your direction, and you'll be very frustrated because you got stopped out and price went in your favor anyway. So please don't do that. Now you may ask me, Ben, what do I do when I take a loss? Again, no worries, I've got you. Go down to 4 micros, okay? So you half your risk. So if you're at $480 risk, you go to $240 risk. That's with a 30 handle stop. Now, what happens if you lose again on 4 micros? You stay at 4 micros until you get your next win. Once you get your next win, then you go back up to that original amount of 8 micros, okay? This will help you stop blowing accounts, okay? Because many people, they take a loss, and instead of actually reducing risk and stepping back and seeing what they've done wrong and self-reflecting, no, they will not do that. They'll double their risk and they'll blow their account very quickly. So you don't want to be that person. You want to stay in the game, and the way to stay in the game is by reducing risk, seeing where you've gone wrong, fixing the things that you've done wrong, and not doing that mistake again going forward. And that way you've got capital and you can keep trading and you can bounce back. If you go all in on the trade, you cannot bounce back. You're done, okay? You've blown your account, you've lost money, that's it. It's going to be very difficult to carry on trading and treat this as an actual career. So make sure to use risk management. If you don't use risk management, you're literally gambling. You are simply gambling. And lastly, guys, the final rule that you should follow, okay? One winning trade stops you. If you take a banger, whether that's a 100 handle win or even a 50 handle win or a 40 handle win, you are done for the day. You're walking away, you're not being greedy, you're done, you come out the next day, okay? One win, that's it, you're out. Simple as that. Okay guys, so with all of that, okay, we've literally covered every single thing that you need in order to become consistently profitable trading ICT concept. Obviously, you need psychology, which comes in time, and there are also tips that you can use to help with psychology. For example, risking the amount that you're comfortable risking. You're going to be less emotional, you're going to make better decisions compared to the person who's over leveraging, they're going all in, they're going to be very emotional and they're going to make horrible decisions. So there is nothing else to really go over. As long as you follow this, you should be profitable. Now, again, it's easier said than done, guys, because I make these videos every single week and it is very repetitive, right? But people continue to watch it and for some reason, they're still not profitable. Why is that? Because they're making mistakes, and that's exactly when one-to-one mentorship comes in. A mentor or a person that's sat there with you, keeping you accountable and actually looking in from a different perspective, saying, okay, you're doing this wrong, right? You're not waiting for this, or you've done that here. And they fix those things. Once they fix those things, that's when the person actually becomes profitable. So with all of that being covered, guys, let's jump straight into the live trading example. Let's break this model down, and that way you guys can actually see it live in action. You can see exactly what it looks like on the chart, and hopefully this makes a lot more sense to you. So let's jump straight into it. All right, so here is the example that we're going to be going over. Now, we've not really taken that many trades recently because of Christmas and New Year's coming up. I don't like to trade during the holidays, and the market is actually short on Christmas and New Year's, as you guys already know. So there is not many opportunities to take advantage of. Hence, we'll be going over a older trade that we took in the past. And this trade was actually a very, very clean A+ banger trade. So it makes perfect sense to go over it. So the first thing that you're looking out for, guys, on the checklist is going to be a sweep of liquidity. So any 15-minute swing low or swing high will count as a liquidity level. So you can see here, this is a 15-minute swing low. We're going to mark this out. Now, before we do anything else, guys, we need to wait for price to come down and sweep that level. So let's have a look. Boom. Sell-side liquidity has been swept, right? And now we look on the checklist again. What are we looking for next? We're looking for a displacement higher that causes a market structure shift, that creates a fair value gap, and that creates a breaker block. Okay, so again, let's see if we can get it. Okay, there we go, right? We created a swing high here, resting just at that sell-side liquidity level, right? Price came down, it created a swing low. It then created a swing high. It then created another lower low, taking out that previous low, right? So any traders are going long here, they're getting stopped out. It then created a higher high. Now this is the final phase of the breaker block. So we have a failed order block, price breaks above that higher high, stopping all of these traders out who are trying to catch the move. And this is your entry point. So notice how we've broken above this swing high. We've had a market structure shift. We've had a displacement. Look at this candle, guys. It's a very aggressive move higher. And most importantly, we've had a fair value gap. Now, where is your breaker block in this example? Comment down below now. I'm going to tell you in 1 minute. So the breaker block, if you guys were paying attention, is always going to be the highest up close candle inside of the price leg. So you can see here, because it's a bullish scenario, it's going to be a green candle. If it was a bearish one, it would be the lowest down close candle, meaning a red one. So this is the last and highest up close candle in the price leg. This will be your breaker block. Okay, so that's all it consists of, guys. Okay, a low, high, lower low, high, high, boom, breaker block has been created. Okay, and notice how we've also displaced back through the level that we just swept, which is another good sign that price is going to reverse. So we're going to measure the price leg here, right, from swing high all the way to swing low. Anything below 50% is going to be considered a discount. Anything above 50% is going to be considered a premium. So we're going to have an entry at the edge of the fair value gap with a stop of 30 handles. So notice how the stop is just below that displacement candle's low. Can we put it at the swing low? No, we can't. We're risking 40 handles. So we're going to leave our stops at 30 below the candle's low. Now, where are we going to target? We're either going to target a fair value gap, which has not been tapped into in a premium since we're going long. If we were going short, it'd be target a gap and a discount. Or we're going to target the most recent swing high or swing low. Okay, so in this case, it's going to be a swing high. Can we find a swing high in this price leg? Yes, we can, right? We actually have a swing high just there. So in this case, because they're so close together, I'm just going to target the fair value gap that's resting above that. Okay, this will be a more cleaner drawn liquidity for me, resting around 45 handles in the profit. So we have a swing high and we also have a gap pretty much at the same level, resting in a premium. Okay, so that's going to be where I take my first profit. So I'll be closing some of my position off and I'll be targeting external liquidity, which is all the way up here, buy side, where I'll be closing my full position. So this isn't a trade that we just found. We actually took this trade live. I'm sure if you go back on my channel, you'll be able to find the exact live stream on there where I took this. So let's see how this plays out. Price taps in, that will be your entry to go long right there. Boom, we break above the swing high. At this point, I'd start moving my stops to the next swing low. So in this case, it will be this low here, which is very close to break even. I never move my stops to break even, guys. I always move my stops based on market structure. So if we break above a swing high, you move your stops to the next swing low. Now, this low specifically is a very good swing low, simply because we've rebalanced a inefficiency and we've broken above that next swing high. So technically speaking, we should not be coming back to that swing low. If it does come back, we have invalidated that trade. So let's see. Okay, again, price came up, it broke above that swing high again. So what am I gonna do? I'm gonna move my stops and actually trail them in a profit below this swing low. So now our stops are in a profit. And notice how we've just smashed TP1 as well. Okay, so 46 handles secured there. And we're gonna ride the rest to final TP. Okay, boom, again, swing high is broken. I'm gonna move my stops to the next swing low, which is this low here. So the stops are in a huge profit now. Very risk-free trade. We've also inverted that bearish imbalance. So that gives me a lot more confidence that we're gonna head to these highs here. Boom, final TP smashed for over 83 handles on the NASDAQ. So that is pretty much it, guys. Just to add a few more things, you want to be entering on the 1 minute time frame. So anywhere from the 1 minute, the 2 minute, the 3 minute, the 4 minute, and the 5 minute maximum is where you're going to be entering. Anything over the 5 minute, your stop loss gets, way too big and you're risking too much. So I would stick to those time frames. Do all of your analysis on the 15 minute, and of course have your higher time frame levels, such as the daily, the 4 hour, and the 1 hour, and figure out your bias on the higher time frame. Of course, trade with the higher time frame direction. Don't just be treating this as a pattern and entering as soon as you see it. Okay, actually make sure it aligns with the higher time frame draw. So other than that, guys, I hope all of you enjoyed this video. Okay, I wish all of you a happy and Merry Christmas. Okay, also I hope all of you have a great New Year's. I'm also currently in Miami, guys, so if any of you are in Florida, let's meet up. You'll probably see me down Brickell on Christmas and New Year's Eve, getting lit, having a great time. And lastly, if you are someone that's looking to get your trading to the next level, okay, make sure to check out all of the links in the description below. Join the one-on-one mentorship. If you want to come watch me trade live as well, make sure to take advantage of that 50% off lifetime access sale for the next 24 hours only. Go secure your seat right now. Exact same with the mentorship, okay? It's all 50% off, guys. So again, make sure to take advantage of this because it's never happening again, okay? Other than that, have a great rest of your day and I'll catch you lot on the next one. Take it easy, guys.